Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examined token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, welcome to December. We're officially in the last month of the year, and it has been a crazy run for what's going on in the crypto markets. Obviously, last week and even into Monday, we were seeing some pretty poor price action that has definitely recovered in the last couple of days here. Really, we're seeing a ton of great macro news. Vanguard announced on that they're going to be allowing crypto ETFs on their platform for their users to buy. They've previously held a very anti-crypto stance, so this was super exciting to see. There's also a lot of information, or I guess rumors swirling, that the crypto market structure bill called the Clarity Act will potentially get pushed through the House this year, which is also really big. We've also seen that people are now giving greater odds that there will be a rate cut this December. And in kind of acquisition news, Kraken, the exchange, announced that they're buying Bakkt Finance, which is the creator of X stocks, or the synthetic stocks that are getting traded quite frequently on chain these days. So those are all some really great, exciting updates. And we're going to get right into the tokens. So first up this week, I'm going to talk about Sushiswap. So on Monday, Jared Gray, the head chef of Sushiswap, announced he would be stepping down from running the decentralized exchange. So Gray stepped into this role about 3 years ago when Sushiswap was undergoing a really big leadership and personnel shift. And the project has just largely been abandoned. The project's now going to be headed by Alex McCurry of Synthesis. So Synthesis describes themselves as a tech-focused crypto capital fund and DeFi engineering team. They have supposedly made a very large, significant capital investment in Sushiswap to fund ongoing operations. And this person, Alex McCurry, will be taking the lead of the Sushiswap protocol. So if you're not familiar with Sushiswap, they rose to fame in 2020 when they vampire attacked Uniswap by airdropping a massive allocation of the Sushi token to all Uniswap users, along with the additional airdrop incentives for those who then went and used Sushi's DEX. So Sushiswap, however, was unable to hold its ground against Uniswap amid rising competition and these internal issues that I mentioned earlier. So for context, Sushiswap's 30-day volume is about $2 billion. And their annualized revenue is about $73 million, which, again, very much dwarfed by some of the other larger chains. They are down 6.9% for the week. Okay, another legacy DeFi news. Yearn Finance, the decentralized yield aggregator project, suffered an exploit on Sunday night. So specifically what happened is the attacker exploited their YETH product, which was essentially like something that you could kind of invest in as this like yield generating ETH. And the attacker was able to essentially mint an unlimited number of YETH. And then they went and sold those through the decentralized exchange balancer, which, if you recall, also suffered an exploit a couple weeks ago. So the attacker then laundered about 1,000 ETH through Tornado Cash, which is a mixing service that obfuscates token ownership. And so we see this a lot of attackers who exploit protocols will put money through these mixing machines to essentially wash or launder the tokens and then sell them elsewhere. So the incident was just isolated to the YETH product. It didn't impact any of other Yearn's product lines. Unfortunately, the exploit did result in the loss of about $9 million, of which $2.4 million has actually already been recovered through other avenues. So the team has yet to provide like a full postmortem or recovery plan for users, but considering the size of the FAQ at 9 million, or about net 6.6 million now, probably not going to be terribly painful to repay. Yearn's Wi-Fi token, though, is down 4.3% for the week. Okay, next we're going to talk about Pengu. So yesterday, Pudgy Penguins, which is one of the most well-known NFT collection IPs, announced a partnership with the NHL, the National Hockey League, if you're not familiar. So part of the partnership, there's going to be big giveaways and supposedly Pengu meetings with NHL fans, along with other activations that are designed to bring the Pudgy Penguins brand in front of the NHL fan base. This is kind of obviously makes sense. Penguins are a wintry animal, and hockey is a winter sport. NHL though joins a ton of other partnerships that Pudgy Penguins has announced, including NASCAR, Walmart, Lufthansa, Barnes and Noble, and Target. The Pudgy Penguin token is up 4% for the week. Okay, last up, I'm going to talk about. Sorry, gotta change the slide here. Last up, I'm going to talk about Ethereum. So this morning or today, Layer 1 protocol Ethereum performed their Fusaka hard fork upgrade. So for those who aren't familiar with hard fork upgrades or how Ethereum works kind of as a decentralized product or as a kind of project, they're highly decentralized. And as a result, their development and kind of technical upgrades require much greater coordination, much greater agreement among parties than in other protocols. Like in other protocols, they can say, hey, we're going to make these upgrades, and they just make them. They don't have to, get all these groups involved, get everybody kind of okay with whatever updates are being made. So as a result, it is kind of just technically much harder and physically also harder to get everybody kind of aligned on like, hey, these are the changes that we're going to push through. Therefore, upgrades usually take time to implement, and as a result, they're kind of a bigger deal when they end up releasing. So the changes in Fusaka are actually really centered around scaling layer 2 protocols and providing a lot of mechanisms to improve just like overall user experience. So the main feature is something called pure DAS, which is supposed to increase transaction throughput on layer 2s by about 8x. So like, what does that mean? It basically means transaction throughput is just basically like the speed and the scalability with which a transaction can be done. Anybody who's used blockchain before knows that it can take time for a transaction to happen, for it to settle. And the idea is that with some of the improvements they're making with layer 2, I'm not going to get into too many of the technicals, but basically by not reporting all of the data back to ETH mainnet and using something called data sampling, they can essentially increase those transactions. So increasing those transactions also has the impact of lowering costs for the ELP2s because they have less data to store. And then it also means that it also translates into cost savings for users. So other features, so this is a big one and one that they're very proud of having pushed out. Other features in the upgrade include increasing the gas limit, aligning Ethereum's cryptography with existing standards for enterprise security integrations, and lower latency transactions for users. So again, there's not going to be a ton of stuff that I think that you can kind of necessarily see immediately, but these are all kind of changes and fixes that should help ETH in the long term with hopefully retaining its lead as the largest layer 1 protocol. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.